after the hour on Monday, the 10th of July. Hi everybody, this is Dennis with the Active Trend Traders. Welcome to After Market Monday. After Market Monday is designed to just basically be a real quick market review, highlight a couple of things that I see setting up, and we'll see where it goes from there. Then we will review the things we identified on Monday. On Friday during the How to Make Money Trading Stocks webinar on Friday. That's again another 10 to 15 minute webinar on Friday, just basically to close the package on the week. All materials are presented for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. After Market Money, my objectives are timely actionable intel at the beginning of each week. This sets itself up for both the concept of swing trading and or trend trading, which is a longer term trade, and then we look at stocks, ETFs that may be setting up. Again, premium members will get the exact setups that's premium active trend trading members that will go out as alerts via text messages and the email alerts that go out. So then what else, where to focus? That's what it's giving you a concept. Kind of a, remember, have patience, stand back, and respect the rhythm. So here's some of the things I'm looking at for this week. Nugget, UCO, FAS, QQQ, and then it's 3 times leverage ETF, TQQQ. Cruise, Netflix, Tesla, NVDA. I love this comment here. Let me go back here. I love this comment here. There is no holy grail of trading, only tools and rules. And then Tom Sosnoff, one of his really good quote is, wealth creation is a derivative of mechanically addressing opportunity. That's what trend systems tend to do. They mechanically address opportunities. So let's take a look at some of these stocks that we just mentioned. I'll go over here. Daily, weekly chart. Here's the SPX. SPX, we had drawn this trend line in here about a week ago. As soon as we made that swing high right there, price action is staying below it. As long as price action stays below it, then we will remain in this short-term downtrend in the S&P. Notice, if you will, you get my drawing tools up here. Notice, if you will, how notice, if you will, did I give you a drawing? No, I didn't. Hold on. There we go. Notice, if you will, how today's price action on the S&P puts in a long upper wick, which tells us that sellers, as price action approached this level of resistance, sellers did come into the ballgame to push prices back down. We got down almost slightly, but right to the 20-day moving average, still above the 8, still above the 50, and so this still is intact. The negative divergence is still intact on the weekly charts. Let's roll over to the S&P, and we'll be SPY. Again, similar thing to that. We're using SPY in our strategy number 3, which is we hold a long-term or a leaps position, a straddle in the spiders. It expires in January 2018, and then we're selling premium against this. Again, similar type indication of the long tail at the top shows us that sellers were coming in. On a weekly chart, on a daily chart, excuse me, looks like it wants to turn around and bounce, but we still have the influence of this shorter term downtrend and similar things on the weekly charts. SPX. Let's go to QQQ, which was was definitely more interesting to me as of Friday. We get a nice bounce off this 135.94 level, and then we're pushing up, gets up over the 50, over the 8, and so we'll see if those provide us any type of support. But as you can see here, the TSI has ticked up. That's a positive thing. Didn't provide a great entry this morning, but now that we're moving in the correct direction, we'll see if it continues that way. TQQ is what I'd be trading in a situation like this. And from this low down here at the 100-day moving average, you know, if you took one just right there, you know, it's up about 5%. If it moves from here all the way back up to the Keltner channel, measure approximately where the Keltner channel would be, which if we just extended this, it would be up about there if price action continued to move up. And I'll give you an idea of how far this could go. You know, it's going to either hit resistance one of two places. It will hit resistance at this trend line, similar downtrend, short-term downtrend line as the S&P, or up here at the Keltner channel. And we can wait on that. I would like to see, you know, tomorrow I'll be looking for, you know, something in this area here for a potential trade to the upside. Taking a look real quick at the intraday and weekly. The intraday, as you can see, has gotten where it is extended intraday. This is a 1-hour chart. So as we like to look at the 1-hour charts, I'd be looking for a pullback into the 50-period moving average on the 1-hour chart, which if it continues to roll up, that would be about somewhere between 98.50 and 99, let's say. And if it pierces down through that, then we can start utilizing those levels for planning and projecting out potential entries into TQQQ. Nothing to write home about IWM. It is basically continues to be stuck in this range. We're about 139 up to 143. What level, you know, how much of a range is that? And it's about a 2.5% range. So when you bounce that over TNA, you're looking at a range now of about 6 plus, you know, a little bit over 6%. So whether or not you want to trade that range, you know, I'll leave that up to you. I don't have a really solid entry or trigger on either the weekly, or correction, the daily chart over here, the intraday chart, or running over to the weekly chart. None of those is really giving me anything really great to look at on TNA. I mean, it definitely is putting in, you know, nice bounce here at 54, so you can look at watch the 54. But if it busts through the 54, then it's probably going to continue on moving down. You know, ultimately could run all the way back down to the 48, 49 level. That might make it interesting going into the rest of the year. Remember, covered this last night on last night's video. It's been over 250 days. In other words, about three-quarters of a year since the indexes have corrected more than 5% or more. July tends to be a kind of a setup month. You may get some final spurts in the July timeframe. August, it is the historically the most volatile month of the year. September is historically the worst performing month of the year. And then October, what we get is a spillover from September, where there may be some residual selling left. And oftentimes towards the end of October, we start seeing those initial setups. We get see some of those initial setups for the end of the year trades. And so we'll be keeping our eye on each one of those. Yeah, David, I agree. Way overdue. And if your capitalization on way overdue is meant to shout that out, you're absolutely right. But the central banks have been in the business of keeping this market from going down, regardless who regardless of who the president is. And so we'll see what happens from here. So that's what I'm looking at. Let's take a real quick look at Tesla. Keep it really for the premium members. We didn't quite get a TSI tick up today on Tesla, but we do have a really nice hammer that came into play at the support level of about 302, so it is respecting support zones. I am my tenor on My tenor on Tesla is to be predominantly trying to trade this to the downside. However, I have to be aware of what kind of a move it could put on before it takes off to the downside. Okay, let's see where the 8-day, 50-day, 20-day moving average, if it gets into this cluster about that 340 level, we bounce back into that. That may be the indication that, hey, that may be the resistance area where it would roll down from. I could go a little bit higher than that. If I throw on just real quick, let me get rid of those. Let's throw on just some expectations here on Tesla, utilizing the fib retracement. Fib retracement, high-low. Okay, it's 50% is up there in the 345 range. At 38% retracement is the 335. So that zone right there, given the huge sell-off that took place in Tesla, and right now we have to treat this as if it is basically going to do a bear flag or a horizontal flag, flagpole, horizontal flag. If it drops out the bottom of this, where might it go? I don't know. Let's find out. There we go. There's the bottom of the flag for right now. Activate. Let's move this down to there. And where might it go? Well, 220. What's the price that Goldman Sachs has it? 180. So I think Tesla does have some more downside, but we're waiting for this formation to set up. It's just like when stocks are moving to the upside, and they'll do a pause as they base. They do the same thing when they're moving to the downside. They'll do a pause where they base, and then all of a sudden the sellers will come back in and say, okay, it's time for the next leg down. We have to remember with Tesla, what makes it intriguing is, do you trade it counter trend? That's the big question. Because a counter trend trade from here could take you, about $14, $15 or 5% or so if you're trading options on this puppy. And that's what we did this morning with the strategy 3. We laid an option on this. I think the 310 picked up about 560 on it. Which will meet our weekly objective if it gets hit. So that takes care of Tesla. NVDA. Keep your eye on NVDA. Got a really nice bounce off this 140 level, which happens to coincide approximately with the 50-day moving average. Broke out through the this downtrending resistance line. A little bit of increase in volume, not a lot. So what's the stance on NVDA? Right now, if we get a bullish cross, 820 crossover, I'd be looking for a pullback into the 820 for a potential move to the upside. If we see, David says, if we were to see a major correction in Tesla, our long straddle will increase in value significantly. That's absolutely true, David. Let's just, what if it in fact does fall to $200 or even 180, and we're still holding that long straddle? That long straddle will probably, well, I haven't run the numbers on it, but it will move up in value dramatically, as you say, very significantly. So NVDA, that's what we're looking at there. Again, waiting for the pullback into 820. Netflix. We bought a call on Netflix on Friday as a pre-earnings run. Strategy number 2. It's got earnings on the 17th after market closes. Here's what I'm looking at. If you entered that trade, folks, as part, if you're a premium member, entered that trade, be watching it as it gets up close to this downtrending line. This downtrending line is still in effect, but it could blow through that and form what's, the IBD type of double bottom which isn't a classic technical double bottom, but if it blows through this level, then that level, if I get up into this area and starts to stall out, I'm going to go ahead and take my profit. So let's say if it gets up to 154.50 or between 154 and 155 and starts to roll back over, I won't have any problem whatsoever. I'm just go ahead and taking that profit on that. We're waiting for, as earnings approach, the volatility on that 155 call that expires the week of earnings will continue to increase, sometimes dramatically increasing. Let's see what else I got here. I'm going to cover one more. GDX. If you're trading gold, we'll keep waiting for the gold reversal. I called up, as I mentioned last night, if you're trading the gold miners, refer to GDX, not Nugget, to get a more accurate technical picture of what's going on, because this is the non-leveraged ETF. It is not as susceptible to contango or backwardation that Nugget is, and so it appears as if, okay, we get a bullish engulfing today, a tick up. Do we get a tick up in the TSI? Let's see. Yes, we do. We get a tick up in the TSI. And so based on that, even though this is a lower low, we could anticipate a buy signal in Nugget. Did I not nudge it? There we go. As you can see, with Nugget, this is a lower low, but we get a similar type signal. And we'll basically, I'm just going to wait here. And so, any type of pullback into the midsection of this candle would be interesting. But remember, this thing is very volatile. I mean, the whole range of Nugget today from high to low or low to high is a 10% move. So that's one of the reasons why I like them, but at the same time, they can cut our legs out from under us if we're not careful with it. NVDA, Tesla, Nugget, GDX, I covered all of that. So, okay, well, folks, that should give you a, well, no, the one last one, Cruise. What I'm also watching, Cruise is, kind of trying to put in a basing pattern. Not a lot of volume. Not the buyers are not just coming in and jumping all over this one. So this, I'm going to keep watching because it's part of the IBD 50, but it's not doing a lot of things exciting. And I wanted to show you one more thing, and then I'm going to call it a day. No, yeah, because we're going for 20 minutes. Okay, we're going to go here. Nope, we're going to go here. I'm going to run through these really quick, some of the seasonality aspects that I'm looking for. This is seasonality on the S&P. We're over here now. It is July. As you can see, S&P tends to, and this is a 59-year aspect of seasonality on the S&P. Typically July, upside into the first part of August, sell off after that point. Now, does this happen every year exactly like this? No, but it's something we need to be, this is its tendency based on 59 years worth of data. Well, if S&P is selling off like that, that's where we anticipate our gold in the July timeframe to get a bid. And this is the seasonality on gold. As you can see, July tends, even 15 or 40-year period, tends to be a bottoming area for gold, and then it takes off from there. And so we'll be keeping our eye on this, and it tends to repeat itself into August, September, and October. NASDAQ seasonality, just really quick. Into mid part of July, then kind of sells off into the mid part of August, but then actually goes and does okay going up the rest of the year. Then lastly, Russell tends to move sideways, down to sideways through the July-August September time, July-August time frame, and then goes into a sell-off mode midsection, somewhere in the September area with other market weakness. bottoms in October, then remember, keep an eye on the Russell, IWM, TNA, because it tends to outperform the other portions of the indexes the last 3 months of the year. That's what we're standing by for. Okay, so now everybody is clear about what we're standing by for, and if you are a, like I said, if you're not a premium member, hey, please join us, because you'll, and then you can take advantage of the text alerts and triggers when these seasonal trades take off. So with that, I'm going to call it a day, guys. Sorry for running a little bit late. It is, yeah, I ran 20 minutes rather than 10. But God bless everybody. Have a great week. It looks like it's going to be an exciting week. So, aloha.